And you can see that we've obviously got a Charlie D transition candle in the background here. Can everybody spot the Charlie D transition? I'm assuming Reeve's done the same delta as what we've got on the screens. So there's your Charlie D buy side transition candle right there. So what Reeve's now looking at is he's now looking to try and trap some of these sellers in here. See these sellers here? Reeve's trying to trap some of these guys. You know, so when you see these sell side imbalances, these are the guys you want to try and trap. So what is he trying to do? He's found the Charlie D transition. He's found the sellers that don't seem to be getting any progress to the downside. He's found quite a large amount of volume to trap as well in this candle here, a lot of volume in there to trap as well. So when you're looking at that, you're now looking at that and saying, okay, where is that trade? Well, that trade is now this value here. In the short term, the yen has caught a bit. Okay, so, you know, in the short term, we've got that coming in. In the short term, we can quite clearly see that we've got that value narrative. Remember, if the blue line is falling, you're bullish. You're bullish. That's the gold-silver relationship. If the blue line's falling, you're bullish. This is a negative core. Okay, this is at bottom edge is a positive core. So when that's rising, you're bullish. So when the blue line's falling and rising here, you're bullish gold. So you're looking for that little change there. This is the first relationship that changed a little bit here. When the blue line dropped. Now, it's not ideal for obvious reasons. The red line didn't rise. But overall, the red line has still risen against this drop here in the blue line. And the red line's risen by more than the drop on the blue line. So if I was to take this up a time frame or two, you would have seen this as a perfectly valid buy trade. At the same time, you can see this separation here against this narrative here. And obviously, you're now looking at this as a trade area to buy into. With those trap traders now visible and the Charlie D now visible, it makes sense to take a pop at some buy-side trade opportunities. And obviously, the idea of getting that to move to the upside is exactly what statistical arbitrage is there for. Statistical arbitrage allows you the first early look at a potential move. And sometimes that works out, and sometimes it flattens out, and you end up with a scratch +1. The point is, you nearly always end up with a scratch +1 as a bare minimum. And therefore, on the odd occasion, these arbitrage trades really do pop, and they can pop for thousands of dollars. If you've got confidence to now take part in those arbitrage type trades, then you're going to be in those $1,000 pops when they happen, because you know you can always scratch them out at +1. The more times you trade, guess what happens? The more chance you've got of catching the breakers, the markets that really pop hard. And sometimes once or twice in a day, and it is only once or twice in a day, sometimes they do pop, and they do pop hard for you. And that's when you start making the big monies. So when you've got your setup lined up and you can see the trade ideas, the order flow ideas in sync with your trade idea, you hit the button and you see what happens. That's all you can ever do. Hit the button and see what happens.